One of the most crucial things that lenders take into account when you apply for a mortgage is your credit score, to meet the requirements as well as the loan itself. Higher scores usually translate into better terms and lower interest rates. What is an acceptable credit score in order to purchase a home in the US? Then, to be clear, if you're buying a house with cash, your credit score is unimportant. But if you want to purchase a home with financing, as most American homeowners do, then your credit score becomes significant. While having the highest possible credit score of 850 never hurts, there isn't a single set credit score that will automatically qualify you for a mortgage. There are minimal credit score requirements set by lenders, even if they may not specify exact qualifying amounts. Let's have a look at different lenders and their required credit scores. Firstly, conventional loans. These are mortgages provided by commercial banks and savings and loans associations. They are not provided by or guaranteed by a U.S. government agency. You're generally more likely to be approved for a mortgage loan from these companies if your credit score is higher. Even with credit scores as low as 620, many lenders will still want additional conditions from such borrowers, like a greater income or a larger down payment. Let's now talk about loans from the Federal Housing Administration, particularly for first-time home buyers. The FHA insures loans designed for customers with weaker credit scores and down payments. If your credit score is 500 to 579, you may be eligible for an FHA loan with a 10% down payment. If your score is 580 or higher, you may only need a 3.5% down payment. Applying for a USDA loan is possible if you wish to buy a house in a qualified rural area. The U.S. Department of Agriculture insures this loan program for borrowers with low to moderate incomes. To be eligible for a USDA loan, borrowers typically need to have a minimum score of 640. When a borrower's credit is further examined, USDA lenders may occasionally take a worse score into consideration. VA loans are available to active and retired military personnel as well as their families, and they are guaranteed by the U.S. Department of Veterans Affairs. While many lenders, who are the ones who actually provide the funding, have a minimum credit score requirement of 620, the government does not. Now, check out jumbo loans. Jumbo loans are larger than typical mortgages. As of 2024, most markets will have conforming loan limitations of $766,550 set by Freddie Mac and Fannie Mae. Because borrowing such a big amount of money carries a higher risk, many jumbo lenders require a credit score of 700 or higher to qualify. Numerous lenders utilize the FICO methodology to calculate credit scores for determining the optimal credit score for purchasing a home. A higher score denotes less risk to the lender. Customers are graded on a scale from 300 to 850 points. A credit score of 800 or more is regarded as exceptional. A score of 740 to 800 is very good. If it is between 670 and 740, it is rated good. From 580 to 669 is considered fair. If your score is 579 or below, it is deemed poor. Now, why does your credit score matter? Lenders use your credit score to assess your likelihood of repaying the mortgage and, consequently, their risk. Your debt-to-income ratio, DTI, or the proportion of your monthly debt payments to your income, is another factor that lenders look at. Generally speaking, the ratio should be less than 36%. However, some lenders will accept greater ratios in exchange for a larger down payment. Even while specific lenders set the minimum credit score required to qualify for the best mortgage interest rates, a few points can occasionally have a significant impact on your monthly payments. For instance, the monthly difference in principal and interest payments between a 6.5% interest rate and a 7% interest rate on a $300,000 mortgage is $99 per month. Throughout the duration of a 30-year mortgage term, that equals more than $35,000. What should you do with bad credit score? Find out which bank, credit union, online lender, or other financial organization can provide the loan you're looking for by contacting a number of lenders. Obtaining a pre-approval from one of these lenders might help you better understand what kind of interest rate you should anticipate. It also lets home sellers know you're a competitive bidder. If you're experiencing difficulties receiving pre-approval for a low-cost loan, think about adding a credit-worthy cosigner. Additionally, you might be able to refinance your house loan at a lower rate in the future if you end up closing on a terrible credit mortgage with a high annual percentage rate. In the long run, refinancing at reduced rates may become more accessible to you if you take steps to improve your credit now. Although getting a good credit score is difficult, you can overcome this problem by taking small steps. We sincerely appreciate you watching this video. As always, we would love to hear your comments.